Hi everyone, Paige Panzarello here, and I am the Cashflow chick. It has been a while since I've been on Facebook Live, so if you join in, I wanted to talk to you about something kind of cool today. It happened a couple weeks ago, in and amongst all of the frenzy and the flurry that's been going on in our world these days. I hope everybody, by the way, is safe and secure, that your family and friends are. I know it's an odd time right now to be trying to do anything really in today's world. So just, please be safe. Anyway, just wanted to say hello and talk to you about a situation that actually happened a couple weeks ago. I was on another group here on Facebook, and there were a couple questions about note investing and how to, like what's the best way to go about note investing. And there was this one situation. We have a lot of newbie note investors that are starting to come into this space, which is awesome. I'm really excited. The note space is very, very collaborative, and we all work very well together. But again, I just want to caution you because people get caught up in the details of actually, they don't get caught up in the details. That's the problem. They get caught up in the equity that is in the property that's securing the note. So I just wanted to talk to you a little bit about that today. I actually had somebody come to me, and it was a great learning experience, so I wanted to share it with you. He came to me and he says, Paige, I've got this great opportunity to buy this great note. And I said, about it. And he says, well, the property value is worth $135,000. And he says the UPB, which means the unpaid principal balance, is $35,000. So he's thinking there's a huge, $100,000 cushion of equity there. And he says, and the total legal balance, meaning that, all the fees and everything else that are legally allowed to be collected, is a little over $40,000. And he was very excited because he's got this huge equity cushion, right? And I wanted to kind of expand on that today, because yes, that might be great depending upon what you pay for it, right? So of course we all know, we've heard the saying that we buy, we make our money when we buy and we collect our money when we sell. I said to him, I said, well, how much is the purchase price? And he says, oh, I'm getting a good deal. He says, I'm only paying 95% of the UPB. Now, remember I said that the UPB was $35,000, okay? Now, usually note workout costs land somewhere in the 10 to 12% range of purchase price, okay? Already he's underwater in this note. And I said to him, I said, well, it's great that, that you want to work with a borrower, because that was his end game. He wanted to work with a borrower to be able to get them to reperform, help them get back on their feet. Apparently they had lost their job, and kind of like what's going on right now, in right now in today's world is that, people are losing their jobs. So I am seeing some opportunity to help some people here coming down the pike, but I digress. So he was excited about being able to help this couple who had lost their job and have now gotten back on their feet, but they're about a year behind. Okay. Anyway, so he says, yes, I'm going to be paying, 95% of the UPB. And I said to him, I said, I'm really sorry, but you're going to be completely underwater. And he says, why? He says, there's $100,000 worth of equity. What people don't understand is when you come into the note space, yes, we are buying, especially if you're buying first position liens, okay? You're buying based on either the legal collectible balance or current market, which is house, right? Because you want to make sure that your invested dollars are safe. So when he's looking at this $100,000 cushion, what he's not looking at is that he's only owed as much as he. So the total legal collectible balance is $40,000 on this particular note. And the securing collateral has a huge cushion of equity, right? $95,000 worth of equity cushion. What he didn't realize is that you're only owed as much as you're owed. And it happened to be that this house was, from what I understand, was in a good area, highly sought after. So very likely if he took this house to foreclosure, then he's now going to, probably sell this to third party. And the thing about note investing is when you're only owed $40,000, let's call it $40,100, okay? And let's say he goes to a foreclosure auction and he puts this house, this note up for foreclosure, so he can collect his invested dollars. That's what foreclosure does, is the bank will allow us to collect, as the bank, we're allowed to sell the house, to force the sale of the house, i.e. foreclosure, and allows us to collect our invested dollars back, the money that's due us. The problem is that you can only collect of the total amount due. So if he's owed $40,100, he cannot collect more than $40,100. So very likely he's going to put it up for foreclosure auction and set it up as an opening bid. We as the bank get to establish the opening bid. We don't get to bid after that, but we establish the opening bid. So let's say he sets the bid at 100% of what he's owed, so $40,100 in a highly sought after area on a property that is worth $135,000. Very likely this is going to sell foreclosure auction to third party, which can be a good thing because you collect a check, but a bad thing in that if the third party bids $40,101, we as the bank are only going to get the $40,100 that is owed to us. So that third party buyer at the foreclosure auction is going to get to capture all of the equity that is in that house. I hope that makes sense. So a lot of note investors get really caught up in the equity of the house, but they're not looking at the real numbers. What is the legal collectible balance? Now, I'm not saying that this was a bad note. I'm simply saying he was overpaying for it. Generally on something like this, and apparently the borrower started to perform a little bit, but still about a year behind. So he was looking to pay 95% of unpaid principal balance. Now he's underwater, especially because it's going to take him some money to get it to a foreclosure auction. So my recommendation to him, of course, was not necessarily to walk from the note, but really pay attention to the legal collectible balance. So if he's only owed $40,100, then you're going to buy based off of that maximum amount and discount it from there. So let's say he discounted it to 67%, of the maximum legal collectible balance. I think he'd land buying this note for about $24,000. Now that gives a much bigger cushion, right? It gives a bigger cushion of equity. Because now he's got $16,000 in equity if he's paying $24,000 for a note on which he's owed $40,000. So if he does sell it to at auction, now he's not going to be underwater. Now he's at least going to capture some of that equity and capital back and make some money on this deal. But so many note investors these days get locked up. They get so caught up. Oh, I got this great deal. I can buy this thing, for $30,000 or $29,000 and on a $35,000 UPB. But the legal collectible balance is so low, there's no margin. So be really careful. Don't get caught up in the equity, especially as a note investor. It's awesome to get caught. You want to capture and flipper, sure. Up in the equity if you're appreciation and capture that equity and put some money in your pocket. As a note investor, we need to be sure though that we're not overpaying for a note because we've gotten caught up in the equity. There are a couple options, that would have been available to him. Certainly He could have gone through perhaps maybe a deed in lieu of foreclosure. That would have helped him to collect and capture that equity without going through a foreclosure sale. A deed in lieu of foreclosure is basically when a borrower agrees to sign the deed of the house over to you as payment in full for your loan, which has some great upside to it and also some not so great upside. You need to make sure that there are no junior liens behind you. Because if there's junior liens, if you're taking the house as full for your loan is getting wiped out. So really be careful and don't get caught up in the equity. Don't get caught up in the equity of the property when you're a note investor. It's great if you're attempting to take hold of the house, and that's your exit strategy. That's currently not my exit strategy. I like to help people to reperform and stay in their home. And that's what this gentleman was trying to do as well. But I think that, he got caught up in the $100,000 equity that was showing this particular property without really looking at the final numbers. He was not leaving himself enough of a cushion. Hi, Robert. Hi, Patrick. Yeah. Thanks for joining. So I've been out of touch for a little while. Things are busy, but all good things. And there's some really scary things that are going on in this world today, of course. But I do see that there's some great opportunity that's coming down to us pretty soon here. So stay tuned for that. I'll talk about that at another time. But anyway, I really wanted to, because this was such an important lesson, that I wanted to make sure that note understand that yes, we evaluate the securing collateral, meaning the house. Yes, it's great if there's a lot of equity in the house, because that just solidifies your position as the bank, as the lender. However, if you get so caught up in the equity and you don't look at your unpaid principal balance and you don't look at your legal collectible balance, then you're going to get yourself into some serious trouble, especially if you overpay for that note. Now, sometimes the legal collectible balance is significantly higher. Sometimes it's even double what the UPB is, the unpaid principal balance. So sometimes, in this case, had he had a legal collectible balance of perhaps $70,000 versus just $40,000, now he's got a much better cushion and opportunity to capture that equity that's already in the property. So follow me here in that train of thought. Let's say the unpaid principal balance is only $35,000, right? And he pays 95% of that. So I can't do the math off the top of my head, but let's just call it 30 grand. Let's say he pays 30 grand for this note that he's owed. The unpaid principal balance is 35,000. However, between the default interest, any forced place insurance that's been paid, any taxes that have been paid on behalf of the borrower by the bank, we have the option to do that. So let's say the legal collectible balance is $70,000. Now we're talking. So if he paid 30 because he's bought at 95% off of UPB, unpaid principal balance, but the legal collectible balance is 70,000 and the house is worth 135,000. Now he's in a position where he's going to make some money, right? Does that make sense to everybody? I hope so. So it's okay to look at the equity, but just make sure in terms of your numbers are either that or the BPO or the current market value is going to determine your price, your purchase price, but also really pay attention to your legal collectible balance. And oftentimes, if you make those determinations, so when you're doing your note evaluations, be sure to get pay histories. Everybody, that's important. And be sure to ask, what does a reinstatement look like? What does a payoff look like? You can ask for those things as well as part of your due diligence. So hi, Jeffrey. Great. Yeah. Thank you so much for your kind words. Great to see you. So yeah, just make sure that you know your numbers. Make sure that you know your unpaid principal balance, your legal collectible balance, and then how that relates to the equity in the property. But don't get tied up. Don't get confused. There's so many investors that have that allure of the equity that's sitting in the property, but they don't realize if you're only owed $40,100, if the next comes in at a foreclosure auction and bids $40,100 and 1 penny, you're only going to get $40,100. So don't fall into the trap, okay, of basing it on equity alone. Factor in, of course. For those of you that that do note investing to capture the actual house, such that you can fix and flip it, that's an opportunity for you as well. And certainly you want to make sure that you are aligned with and know what the equity is in the house. But again, if it's a house in a desirable area and it's really low like that much equity, you have to think that if you have to take it to foreclosure auction to capture the house, to get the house, if the borrower's not willing to sign it over to you as a deed in lieu of foreclosure, if you have to foreclose to get the property, very likely it's going to sell to third party. And that third party is going to be the one to capture the equity, not you. So make sure that when you're doing your processing and your evaluations of your notes, that you're looking at all the numbers, you understand the numbers. Because in this scenario, 35,000 legal collectible balance of 40 and equity of, the BP 135, if you end up paying 95% of your unpaid principal balance, you're now going to be in the hole because you can only collect up to the legal collectible balance. So it was a great learning experience. And it was a great teaching experience for me to help those that get involved with the equity versus the UPB of the property. And it's great to help people. But remember, even at the airlines say you've got to put your oxygen mask on first, right? So do that first. Put your oxygen mask on first before you can help other people. Make sure that you are safe and secure in your note investing, in your purchase price, and are in a position where you can help people. That's usually, not usually, that's always what I try and do. I try and buy notes where I can help. Sometimes it doesn't always happen. But when it does, it's very gratifying, very gratifying. And also I get to make money doing it, which is so cool. So just wanted to point that out to you today. Wanted to share via Facebook, especially since we're all here in our home and staying put and staying safe. I wish you all a really great day. Thanks, Annie. Appreciate that. This have a great day. And this is a great learning opportunity for everybody. So, take advantage of it. Take advantage of it and take that mindset and just turn those lemons into lemonade and seize the opportunity. This is opportunity right now, everybody. So thanks for listening. Thanks for tuning in. Thank you for all of your kind words. Don't get caught up, note investors, in the equity unless it's to your benefit. But you have to know whether or not it's to your benefit or to your detriment. All right, everybody. Thanks so much. Again, I'm Paige Panzarello. I hope you have a great rest of your day, great rest of your week, and stay safe and be healthy. Okay, bye.